Hello, today is March 29th, 2025. As always, we'll start with our disclaimer. We'll do our review of our calls and then make some predictions. It's my trading plan for Monday. Monday is March 31st, 2025. Please remember, from now till the first week in April, I'm just not going to be able to follow the market closely. I normally spend a lot of time on my analysis, and I'm just not able to do it until the second week in April. If you're going to risk money on this, please bear that in mind. This was the pattern with yearly high. Tends to be a day of decline, which it certainly was. We did have a target, 57, 55, 98. We said it was pretty far away, but if we gapped up, we had a chance to hit it. Obviously, we didn't gap up. We gapped sharply in the undesired direction, and the calls killed before the open. This is a huge decline, stopped at the Fibonacci target of the prior consolidation. During the day, MEJT said this drop was false, wouldn't stick, so this rally's false, wouldn't stick, and that's already played out. We're now once again under the lower Bollinger Band on the weekly chart. We normally don't stay there very long. Doesn't mean we have to go up on Monday. This is actually a fairly bullish pattern here, believe it or not. We gap down, hit a lower low, and then closed. This is the close here. We closed over all these midday lows, which means for the last few hours, the market didn't accomplish anything. And then as soon as the market closed, we collapse under these lows. This is the same principle as the wall into the close. It means that although professionals are not willing to sell under this price, once they leave the table and liquidity dries up, amateurs are willing to get out at any price. And of course, the professional traders, the market makers, have to take the other side of the trade and go long when they're willing to sell at any price. If that's the right interpretation, which we aren't going to know until Monday, if that's the right interpretation, they're going to get their money back and a lot more pretty fast. If that's the right interpretation, they're going to gap up smartly over this last high and add to that and keep going up. And if they don't gap up smartly, something's probably wrong with the analysis, and I'm not going to have any plan. This is our long-term count. This is a daily chart. We have a pretty clear 1 and a 2. We have to find some way to count the waves after the low on March the 13th, which according to this analysis should hold. And that's about 55.04. It's maybe a little over 1% under where we are now. If that doesn't hold, something's wrong with this, and that's always possible. Let's look at what's happened after March 13th. This is a blow-up of the count. I mean, if we were clearly in third wave up, I should find some way to count this as a 5-wave structure. That's not so easy. Well, this was the count I had. I had an ABC and everything worked, but how do you count this as a 5-wave? I can't do it. Maybe there's a way that I missed, but let's see what we can come up with instead. It's the same one. You can now count this as an A, a B, and a C. With that C, equal to twice A. So we have an ABC, and if this low holds, it would be 2. And if that low holds, we're going to start a wave 3 up of multiple degree. We'd have to count this as a 5-wave structure with an ending diagonal triangle. If that's true, this low should hold and we should go up. When you hold this all day on a Friday, it should just keep on collapsing, and it certainly should get followed through Monday. If you have a day like this on the Friday, it almost always spills over into Monday's open. But if you can't make any progress going down until after the close when the big money leaves, and if you can't continue this down Monday, something fishy is going on. And particularly if a day like this on a Friday is followed by gapping up on Monday, that's a very bullish pattern. Now, of course, we don't know where we're going to open Monday, but if I'm right about the late collapse being a false move, we're going to gap up and have a big rally. And if we don't gap up and have a big rally, I don't really have a good plan. Friday's market gapped down, hit a lower low, but closed over midday lows. And if that's maintained and Monday's open, this is a bullish pattern, should lead to higher prices during the day. The sharp sell-off after the close is a hallmark of panic selling by retail customers. If that's the right interpretation, we should gap up Monday, add to the advance, and continue to rally. And if that's not what happens, I don't have a good plan. If it is what happens, there should be plenty of time to climb on the train going up. This is just not the way declines on Fridays usually end, where you hold the lows for hours and then once the professionals leave, suddenly collapse. If I'm right, we're going to gap up and keep going up, and if that doesn't happen, then I just don't know what's going to happen. We could go lower. I have no plan for that, to be honest. So it's critical to see if we gap up Monday and add to it. If you gap up and just reverse, it doesn't mean anything, but it should add to it. And no matter how negative a day looks, if there's no follow-through, if you can't go at least 1 cent under a close, at least 1 cent under the close on a day like this, if you gap up instead and don't add to it, that doesn't mean anything. That's the market's way of saying it made a mistake. So we'll have to see if I'm right and we gap up and add to it and don't close it. Because if I'm right, it's starting a wave 3 of multiple degree. And if I'm wrong and we don't gap up, I'm going to keep my wallet closed. And that's today's call.